Oh my goodness, it has been a bumpy ride on the stock market this year. From trade wars to the constant threat of recession, it's enough to cause any investor to break out in a cold sweat. Well, that's where safe haven stocks can assist. These are assets that have historically held or even gained value during downturns. Gold, one of the most popular. In fact, recent data shows more than 2/3 of Aussie investors plan to increase their precious metals allocation this year. Big jump from last year. So how can you use gold and other safe haven stocks to fortify your portfolio? Market analyst at Bell Direct, Grady Wulff, joins us now. Grady, good to see you again.
Good to see you, Koshi, as always.
All right, let's start with gold.
Yeah.
How can you get exposure to gold through the market?
There's a number of different ways. You can get physical gold, you can get ETFs, you can get miners or explorers if you have a bit of a riskier appetite, but you obviously have the safe haven nature of gold, or you can get producers. So what we're looking at the moment, the producers have been on a run. There's no denying that. Northern Star Resources, Evolution Mining, these companies have gone from strength to strength because they're selling unhedged onto the market. You don't want to see hedge books right now because we want to capitalise on the upside potential of the spot price. At the moment, not many investors are buying into the gold physical gold side because you need a pretty strong safe at home for that. But the ETFs like PM Gold, GOLD, NUG, those ones are going really well at the moment.
Okay, so the big miners
Yeah.
and also the ETFs.
Yeah, exactly.
Give you the exposure. Banks are always seen as a safe haven, are they?
Absolutely, and I think more so than ever right now. Investors have seen them as this guaranteed return, this guaranteed safe haven, and I think the valuations, everyone's had a CBA on a sell for how long now? Nearly 2 years.
Yeah.
They're trading on PEs that are astronomical, but investors see our banks in Australia are so heavily regulated, there's no chance they're going under. So they're simply a safe haven, safe returns, income, you got your dividends coming in, they're growing, so we know that they're a safe haven right now.
CBA, the biggest. Is that the number one target for investors?
It is. You can't go wrong with CBA. And Matt Common runs a very tight ship, a very good ship, and the company is simply the best in Australia.
Any other banks?
We're looking at NAB as well because of the business banking element. So business banking has gone obviously gangbusters recently with the upside potential, rate cut outlook. A lot of businesses are spending more now. They have more cash in the bank because we haven't seen the volatility we have for a long time. So they have a lot of cash in the bank ready to pounce on acquisition opportunities. So that's really boding well for a company like NAB with the business banking side. But Westpac and CBA have said in their most recent results they're going after the business banking arm of NAB. So that's going to be a tight competition for some time to come.
Okay, all right, so gold, banks.
Yeah.
What about other safe haven stocks that tend to do well when the market's volatile?
Funny you mention this. Companies like Aristocrat Leisure, defensive stock, safe haven nature. As long as casinos are doing well, Aristocrat is doing really well.
Yeah, they make poker machines, don't they?
Yeah, but they've
Physical
also,
and online.
Yeah, online. They also rent out the machines, so annual recurring revenue through that. They've got these new games they're launching onto the floors, which are performing extremely well. And they have the iLotto business, which is online gaming. So younger demographic, all of us have an iPhone, so we can all access these games.
All right.
So they go from strength to strength. Their profit in the most recent quarter was $1.6 billion US. So
wow.
Incredible numbers there. We also have at the moment Coles. Coles has gone from strength to strength. It's a hold rating at the moment because of valuation terms, but it's one that you can't go wrong with. It's a supermarket we all need to eat, and they got cleared recently of the ACCC concerns of price gouging. They're not, but it's just a stable growth. It's stable growth year on year, and you've got the outlook for strong returns and a dividend as well. So that's a good one.
A third safe haven stock?
The insurers right now. The insurers are paying premiums right now because their premiums have gone up. You and I, a lot of Australians have gone into health insurance recently. Medibank have just upped their prices. So, and we're not going to argue. It's a very sticky service. A lot of us don't have the time to go and switch, or we can compare the market like I did recently. But again, once you're in, you kind of don't have the time to switch and save. So a lot of us are time poor, so the insurers can charge whatever they want.
Right, so Medibank you picked there.
Medibank, QBE, IAG. Even last week, IAG said they've had 2,500 claims already from the flooding in New South Wales just recently. But they also rallied that day because that's lower than they were predicting for the April month over as a whole. So insurers are doing well at the moment.
All right, Grady Wulff, love your work. Some great safe havens for us to take the stress out of the volatility in the market.
I know.
Good to see you.
Good to see you as well.